So today I want to show you something which maybe you haven't seen before or heard about before. And I want to focus on one specific moving average, which is the 314 SMMA. Why 314? 314 is connected, so it's the pi number, the 3, 14, 15, and so on, which is connected to the golden ratio, to the Fibonacci numbers, and so on and so on. I don't want to spend too much time explaining what's really behind it, but what's most interesting is to see what it's actually doing on the chart. If you look actually in what was a very strong support for us for many months on Bitcoin, holding us at these levels, it was actually this moving average. And if you look today, which one is stopping us, it is again this same moving average. I've been trading with this moving average for a while now, especially since I've been studying a lot more cycles of time, the cyclical nature of the markets, and this moving average has been a very useful one. We could go in the past and see if it has been of any significance before. And actually, I need to go to the Bitstamp chart because Coinbase doesn't go back enough in time. And so I'm taking us back here to the previous bear market. And you can see actually this has, kind of here almost was the support, but most importantly, what happened afterwards. You can see here the 200 moving average is, the dark green line is the 200 moving average, which so many people consider extremely important. And I mean, it has an importance, but a lot of people say, if you're above the 200 moving average, you're back in a bull market. If you're below it, you're entering a bear market. I much prefer using the pi line, so the 314 SMMA to gauge where we actually are. And you can see here, like once we went below, it became the clear. Here we spent maybe 1 or 2 days above it, but otherwise we went below right after, and you can see that it was a very clear resistance. And then we tried, and what did we hit? We hit exactly again this line. We went up, and what was our new support? It was this. It was not the 200. The 200 had almost, once we're back in a clear uptrend, then the 200 becomes again this more important support. But before that, the really difficult and important one to get back above was this 314 moving average. And then after we just don't touch it for a while, because the more parabolic we went, the further away from this moving average we were, obviously. And then it took a while. It took until let me see, it took until July of last year to touch it, to test these levels. And now we are, for the first time in a long time, in about 6 months, seeing if we can get back above this line. We might again, spend a few days above the 314 moving average. It's totally possible. But because it was such a strong support in the past, it will be for sure. And you can see we're really struggling to get, we've had 2 attempts already getting back here. So that's one thing to keep in mind. This is a very, as much as the 200 was just really easy to get, to pierce through, this one is not going to be the same. If we do, I doubt that we'll spend much time above this line. Although if we break above and then we find support on it for a while, this would be a very, very bullish sign. I just don't think that we're there yet. I doubt it. If you want to see maybe the importance of this line on the maybe 4-hour chart, you can see, for example, that this whole last triangle-ish thing that we had here, the whole price was a squeeze basically on the 4-hour chart between this 314 and the 200 moving average. And then as soon as we broke above this line, then we were ready to pump. But this whole time, this was a very strong resistance to go through, and actually it had been pressing us down already for a while. So being back above it on the forward chart is actually a rather positive sign. For now, having the 200 moving average crossing also is a good sign, but we'll see what the next weeks and months have for us. On the 1 hour, it is also a somewhat consistent support, and actually I find it a lot more reliable than the 200 once again. You can see here, so you can have a constant comparing constantly. Here we went above, and then we find our support again on this line. And whatever time spent under, as long as we're in an uptrend, will be very short-lived. So buying under here can be really good. And very often you just bounce back right away. And then here it becomes a bit more unclear because of the chart being a bit more choppy and messy. But otherwise, you can see that even on the 1 hour, it can be a rather reliable indicator. But I usually prefer to use it anyways on the larger time frames. You can keep on going small and small. Like right now, we're even on the 15-minute chart. But I could find many indicators really which have correlations. So I don't really use it on the smaller time frames, but I use it a lot on the daily. Yeah, so I find it really, really useful on the daily chart. So that's it for those. I do want to spend a bit of time looking at the shorter time frame for Bitcoin here with the 4-hour chart. And I want to switch to Coinbase because I find it more accurate here with the Ichimoku cloud. And we can look here a bit at the support we're getting. So one thing which is slightly concerning is that we had, it's not really exactly head and shoulders because we would need to complete it, and so far it hasn't quite been completed, but it is slightly concerning to see, first spike here, one even here, this one here in the middle, and then once again trying and failing pretty much at these levels. We are so far defending these levels quite well, but I think that the 5K support might get weaker and weaker. So unless we soon see some price action going to the upside, I think that we might at some point break below. Anyways, all of this cloud is giving us a nice fat support. Yeah, usually the bigger the cloud, the bigger the support is, and the more difficult it will be to go below. And you can see here it's really beautiful because this flat line is exactly pretty much a little bit below from the 4,700 levels. You can also see on the 1 hour chart, it's just playing beautifully. Like this one straight line, usually when the line here is very clear and straight, it's usually a strong resistance, and we just went to try it and test it, and then we just went right below. So that's for the Ichimoku cloud, just to show a bit what it's giving us these days. I think that for now, as long as we're ranging here, that'd be interesting to say if we start really entering the cloud or if we can stay on the edge. So let's see for now what it's going to do. And then we have, I want to go back just on this one because that's where I did my drawings. I'll take away. So I just want to show you the levels that I'm looking at these days. And actually this one should be lower. It was just moved. There we go. So if we can't hold these levels, then the next support is going to be down there between 4,700 and 4,800. We might bounce at 4,800, but if we cannot hold here, then really this is the next level, and if this doesn't hold, we won't have much support until 4,400 or even lower. Now if we go above, obviously we have to get through this really difficult area to pass through, because it has been a very strong resistance many times. So if you are looking to place, different buy orders and sell orders, you can look at these different levels. And now we're kind of in this, weird zone where things could really go either way. We just had a solid dump yesterday, and it's like, okay, maybe we just have another leg down. But one thing which I'm also looking at is a certain pattern repeating, which is that of having a strong solid dump followed immediately by another one. So a typical 3-wave correction. And then again having this move up and then starting to turn over and looking like it wants to correct kind of. And having actually it doesn't go lower, you just hear strong pump directly. And it's just very short-lived. It's just a fake out, and then it just dumps, So actually, from here, if you had shorted, actually you would have had some. You were right to short, but they first have this fake pump and then immediate dump. But then, after this, so basically you burn the shorts, then you burn the longs, because everyone here wants to go long. You burn the longs, and then in the end, you go up anyways. And so what I'm seeing here is that we had this pretty sharp decline, yeah, and then again, second leg, going a bit lower but finding support immediately. Again, this kind of pattern here, which is, the chart looks like it's turning over and wants to go lower, and actually we have this pump stopping again at the same levels. Actually, we're playing kind of in the same range, pretending that we're finding support and looking like we're finding support actually above this line, and then anyways dumping. So burning the shorts, burning the longs, and then bouncing immediately. And I mean, here right now it's kind of turning over, and let's see if we can hold this. But I see a pattern repeating, so I think we are still slightly in favor of the bulls. I still think that the bulls are defending this whole area really well, but the more we're going to test it, the weaker it's going to get. So unless we make higher lows and higher highs, at some point we're going to break through it, and it might be a much bigger correction. So this is what I wanted to share today. Yeah, this 314 moving average, the pi line that we call it. So try and use it in your trading, see if you find it accurate, if it can help you. Yeah, that's about it. In the description, I will put all the links and information that you need to have if you want to join our Signal channel, if you want to get clear directions for the market, all the premium services and so on. So yeah, that's about it. Please subscribe if you liked the content, support, and write in the comment what you think. What's your position right now in the market? Are you going long? Are you going short? Where do you feel all of this is going? Thanks a lot, and I'll see you in the next video.